Rajeev Ahuja heads strategy and retail and financial inclusion at RBL Bank. That's going to come out with its IPO now. The IPO is out. Issue price has been issued. Thank you so much for joining us, Mr. Ahuja. I'm going to beg your permission and tell you a little bit of story about my tryst with RBL. Sometime last year, I got one of those pesky phone calls from a third party who said that I'm calling from RBI, pronounced your name incorrectly, and said that, sir, मैं आपको credit card देना चाहती हूँ. And I said, I thought that this is a scam. And I said, आपको पता भी है RBI क्या है? RBI कोई credit card नहीं देता है. And they said, हाँ बिल्कुल, Ratnakar Bank of India. And the egg was on my face. And now I realize why it was on my face, that you've been doing a great job for many years. Congratulations on coming out here. First question, of course, is what is this money going to be used for that you're raising?
Thank you for having us. And I'm sure we earn your trust to do more with you over time. I think in terms of the opportunity, the banking market has immense growth potential.
So there's a bit of a problem in the line. Let's just fix that. Give us 30 seconds to fix that. We'll just fix it. And in the meantime, let me just tell our viewers what this IPO is all about. Ratnakar Bank, it used to be called Ratnakar Bank. Now it has been changed to RBL. It is a very old bank, I think more than 70 years old. But in the last 6-7 years, since 2010, especially since new management came into place, RBL has actually moved into that new age bank space. And unlike other banks that you see, RBL's net interest margins are very strong. It has been growing dramatically, more than 50% growth in its loan book in the last CAGR over a last 5-year period, if you look at it. The interesting thing is that it's been doing that while keeping it very safe. Its net interest margins are high, and if you look at its NPAs, net NPA, gross NPA levels, they are very, very low. So that's the crucial thing that you look at a bank. Growing loan book, high net interest margins, NPAs very low. So that's what we are looking at when it comes to RBL. Going to list at its upper end price band is about 2 times its FY16 book. So price to book is at about 2 times, and let's pull those numbers up for you. CASA ratio, I'm going to look at that. If you look at it, 1.9 to 2, that's the FY16. Some calculations show 2.1, 2.2. Yes Bank is at 3 times, IndusInd at 3, City Union at 2.2. So if you look at it at 1.9, it will be at marginal discount. In fact, once we have Mr. Ahuja back, I'll be able to ask him that question. But I think we have him, Mr. Ahuja. Mr. Ahuja, let me again ask that question because we lost that line. What is this money going to be used for that you're raising?
Yeah, thank you. I think we are seeing tremendous opportunity to continue our growth momentum. So first order of business is really to shore up our tier 1 show, to finance our balance sheet growth, branch expansion, branding, technology, and many other areas of expansion of scale and customer engagement. So that's principally the need to raise money at this point in time.
All right. One of the things that I was looking at, that dramatic growth that you've had, the only thing is that your CASA growth seems to be lower than the other deposit growth rates that you've had, because I was looking at especially the savings account growth. It varies between 7 to 9%. What are you going to be trying to do that, to increase that growth rate?
Yeah, actually, if you see it, the CASA growth for any bank is a very, very long-term game. And you've got to keep building in terms of infrastructure, branding, technology, products. Have a very serve architect, keep engaging clients to encourage them to place their account with you. So our CASA actually on an absolute level has grown almost in line with our overall balance sheet growth over the last 3-4 years. And actually, in the last 12-18 months, the savings account has actually become stronger. These are normal trend lines in any high-growth bank, where the balance sheet is growing and every metric has to keep pace. As we enter this new phase with a listing, hopefully stronger branding, continued strong execution, I think all of these metrics will start becoming more and more positive over the long run. But I do have to tell you that this is an integral part of our strategy to build CASA in every segment of the business, whether it be wholesale, retail, or rural.
Again, when I look at the breakup of your loan portfolio, right? You seem to be heavily corporate oriented, both SME and big as well. If I look at the retail loan space, I know it has improved from 10% now, I think it's about 18% odd. But for the last 4 years, you've been in that 17-18% range. We haven't seen a dramatic change in. Is that a strategic move? Because the rest of the banking space seems to be moving towards retail. You seem to be still retaining that space.
Yeah, actually, I think it's a nomenclature challenge as well. We have been growing. What we call retail is both urban retail and rural retail. In fact, if you go back in early 2011, we started building our financial inclusion and then our agri business, which is also part of the retail bank. So actually, if you look at it, our non-wholesale segments today is just close to 40% of our total balance sheet. It is part of our structure and our operating model. Retail businesses have a longer gestation and investment phase, but we started very early. So I would hope and I would think that given the learning curve for most of our retail businesses is behind us, the growth momentum in retail should become even more pronounced. And I have no hesitation to say that what we've achieved in the last 3-4 years should continue to be on the same path for the next 3-4 years.
Rajeev Ahuja is with us, Head Strategy, Retail and Financial Inclusion. I must really apologize for these technical glitches. Both our lines are failing, unfortunately, as people probably watch YouTube and put too much weight on the bandwidth. All right, I was, you were in the middle of talking about the expansion process, and I was saying that you've done a great job in keeping your NPAs and, gross and net NPAs down. But as you expand further, is this number likely to rise?
Yeah, so I think it's a very important question. Obviously, the entire last year and a half, the issues of NPA and balance sheet risk have been foremost in everybody's mind. The way we look at it from the very early days, we said what client segments do we wish to be engaged in, what businesses we do not wish to be engaged in. So we avoided a lot of project finance, etc. kind of businesses, which frankly were not even relevant for us, given our small size. So I think what is important as you look at NPA and risk is really, are your underlying processes of client selection, client onboarding, monitoring, early warning system, remediation, are they getting stronger day by day? And I think that's what we can focus on. Because at the end of the day, we are part of the same macro structure. We're part of the same challenges and opportunities. It's how strong you want to be, and that's a matter of time, discipline, and consistent execution. So that's what we focus on. And hopefully, on a long period of time, if we continue doing that, that should reflect in, I would say, numbers which the street and investors and the regulators, etc., watch.
Mr. Ahuja, there are some analysts who have been looking at NPAs and things like that, and they've been saying that right now this is just the tip of the iceberg, or maybe an inverted iceberg, because the iceberg is weighted towards the top, because big projects have collapsed, especially in steel and things which you said that you're not exposed to, steel and power. But there is a growing apprehension that this is now trickling down to the SME space, and unless there is a significant revival that we see in demand and in export especially, then SMEs are going to start defaulting, and some of those SMEs is going to become an NPA. You have a slightly heavy exposure towards that SME space. I'm not saying that you have that risk at all, but what kind of risk analysis have you done to your current road portfolio? Are you hearing any signs of, are you seeing any signs of stress at all as of now?
Yeah, actually, just to correct the data point, our exposure is on the wholesale book, if you're referring to, is a lot in corporate, institutional, mid-market. SME is still very modest.
All right. Okay.
But let me just reflect on the broader question you have. And again, I mean, it's not something which we reference ourselves to the market, because we are still a very small and modest percentage of the entire market. But I think I would say that the amount of discussion around NPA, the resolution of the same, the disclosures of the same. And also, I think in some senses, parts of the economy having bottomed out, some resolution measures driven by the government would all over time, I don't think it's an overnight journey, over time would start reflecting on bank balance sheets. And it'll be very, very bank specific based on their business focus, based on how their challenges have been and what are the new areas they're looking at. So as far as we're concerned, I would really say that we've been focused a lot in avoiding a few areas, strengthening our risk management, client selection process, as I mentioned, and ensuring that we stay on top of risk issues because they will continue evolving faster than what we have thought through in the last 10, 15 years. So that's the only thing we can do, and that's what we are focused on.
All right, I've taken the first part of your designation strategy. I'm going to take in a part of retail, but let me take one more part of retail. The big growth for you came when you took over that part of RBS's, Royal Bank of Scotland's business, right? You took over the credit card business and part of their retail business. How do you maintain that? Is there going to be some inorganic growth as well?
Yeah, so the businesses we acquired from RBS India, late 13, early 14, were principally, I would say, a credit card platform. It had a customer base, but was a modest customer base. And a significant part was really in the retail banking, the business banking side, which was principally a non-asset business driven around other income and cross-sell, which, as you know, is a big focus of RBL. Other than that, we did not acquire any other asset. We got a great set of people who have done this business, who have a great client focus, and all has been totally integrated, and that business now is doing quite well for us. It's principally reflected in our overall branch and business banking and our retail asset franchise. So we've grown it organically since then, and I think there's enough opportunity for the kind of platform we've already created, and I think we can continue growing this business and scope significantly over the next 3-5 years.
Okay, let me get the third part, which is financial inclusion. You have a business correspondent model and 32,000 touch points for people, 32,000 or 20,000, I've forgotten the number. How does that model work? How do you make money out of that model?
Yeah. So this is actually a great question and a very exciting part of our franchise. We started looking at this client segment early 11 with a view that in 8-10 years' time, there should be a large part of India which hasn't been exposed to formal banking and financial services, needing to come into that area and demanding more sophisticated financial services products for their needs. The operating model had to be a lot different, and we experimented for almost like 24-30 months on what should be the operating model. And finally, we experimented and figured that a business correspondent model for somebody of our size and scale is the most appropriate one. That has allowed us to scale up our financial inclusion, which just does not include lending. It includes account opening, micro-insurance, remittances, etc. Has grown significantly. And we believe actually in the next 5-10 years, as the integration of this segment, which is large, into the formal economy is happening because of a lot of ecosystem efforts by the government, Jan Dhan, Aadhaar, mobility, a lot of FMCG companies. All of this is aiding us to provide more and more financial services to this segment. Our operating model is a little different from the others. We work very closely with business correspondents. And the number of 30,000 plus you alluded to is actually a very detailed retail kind of access points which we have developed with partners to provide very simplified financial services to the underbanked, unbanked, who perhaps for a lot of reasons cannot visit bank branches, do not have the time to go and fill up documentation, but are generally open to going to corner stores and doing a few things, including top-ups, bus ticketing, etc. So we're trying to provide financial services in a sachet form, if I may say, through these customer service points, and that's become a very large part of our franchise in terms of customers.
Mr. Ahuja, you've given us a lot of time, but I just have to ask one question. When we were making these graphics in the morning and we were looking at the price band, right? And we had to recheck it several times because the 1 rupee difference. What is the reason for that?
You know, I mean, this is something left to the lead managers, but, you know, I would only say that from the get-go, we've been extremely blessed and have enjoyed the confidence of a very strong investor profile, not just, you know, now, but starting way back in 2011. We've done a lot of private capital rounds, which we've got stronger and stronger investor interest. Our anchor book, which you all are probably aware of, which was closed last night, reflects the continued strength and the franchise, you know, confidence which people have. And I think we want to just play the long game. We want to continue building the franchise because we believe there's enormous opportunities of building the next high-quality set of banks in India, and there's enough opportunity. So in that regard, you know, we will continue doing what we can, and we let the market take care of itself.
All right, Mr. Ahuja, thank you so much. I'm greatly, and thanks a lot for waiting for us through all that technical difficulties. Thanks a lot. Pleasure talking to you.
Thank you so much for having us. Thank you.